how this one change can help you make tens of thousands, hundreds of thousands, or even millions of dollars of extra income over a long period of time. We're here talking about one, the power of compound interest, which truly is the eighth wonder of the world, but also comparing and contrasting real estate returns versus typical stock market returns. Now, stock market returns typically will get you in the ballpark of 10%. Real estate returns are going to get you in the ballpark of 15%. Some could be slightly lower. I think more liquid assets like REITs that are like stocks, or private market returns, core plus deals that are running in the 15% range. Some can be slightly higher than that as well. But for simplicity's sake, we're going to be using 10% and 15% here. Now, we'll start by saying an initial investment of $100,000. And keep in mind, this is mostly for sophisticated investors that already have a portfolio, looking for additional diversification in their portfolio, but also looking to get into really higher yielding asset classes like real estate. So, the first thing you'll notice here, obviously, you're going to be making significantly more money doing the real estate side of things. In about 5 years, you're going to double your money, netting you an additional $40,000. 10 years down the line, and typically a private market fund will have a liquidity event 5 to 10 years out, so that's your typical hold period. But we're talking about $40,000 to $150,000 in additional capital. So 260 versus $400,000 just by changing 5% in your investment return. And that's not a small number, but it is very, very doable in real estate. Obviously, things get significantly more. We're talking nearly $1 million 20 years out, or $5 million in additional capital generated if you're able to hold for a 30-year time horizon. If you're able to invest an additional $25,000 per year, which is about the minimum investment for any private market syndication type of fund. If you do one of those a year and you continue to invest that money into real estate, we're talking about a humongous amount of capital, not only in the delta here, but just the aggregate value here. 20 years from now, $4 million versus $2 million. So we're talking about additional $2 million over 20 years. Now that can make a difference to a lot of different folks. You can see it here in the bar chart as well. Obviously, the difference gets more and more the further out that you go. Same thing here. You'll notice the exponential curve. Again, compound interest, truly one of the magical things about this world. And you can see how it starts to hockey stick up in those later years. Specifically this real estate, because that return is so powerful. If you're able to put additional time into finding the right deal in real estate or the right people to partner with, and you can make these types of returns, you can see just how much additional capital you can generate. So that time spent looking at deals, looking at operators, often very, very well spent time.